So first of all, let me get started by wishing a happy Air Force Day. So since I'm also from Air Force veteran, so it's always a great day. So thank you for your service, everybody. So a quick introduction and then we'll jump into the presentation right away. My name is Guru Nandan Singh. I am 96 NDA 165 pilot course from fighter backgrounds Air Force. So after leaving Air Force, I did my MBA from IIM Bangalore, and thereafter I joined Google. So while I was at Google, I realized that it's my business to earn money, I figured it out that it's not my business to manage my money. There are two issues I faced. First of all, I realized that it's a full-time job. Very quickly, I realized that doing it on weekend was not working out. Second, I realized, and that's where the probably the finance lectures from IMB kicked in, that it's a very deep expertise field. It's not something one can do part-time. So that is the time I started looking out for somebody who could help me with my financial goals. And I came across Ram and Manoj. So they were basically, my goals were twofold. First was skill. Obviously, the people whom I would needed to get help from would have to be should have deep expertise. And second, what I realized that they should be equally invested in managing money as I am. So luckily, I came across Ram and Manoj through my IMB alumni network. Both of them, Ram and Manoj, have more than 40 years of experience in financial world, both in India as well as abroad. Plus, what I realized that they left their full-time jobs and started this Jama Wealth. So that gave me a lot of confidence. So basically, the requirements of one skill and second trust, both was met. I met them physically, went to their office, and I was fully convinced. So I invested on Jama's portfolio in 2019 and did a reinvestment in 2021. But what really changed in last 1 year, as my course mates were retiring, some of them used to call me and we used to have casual conversations. And I just shared with them that these are the things this is how I manage my money. So a couple of weeks later, a couple of my course mates came back and said that, hey, I also invested with Jama. So I was quite surprised. So I figured that probably armed forces officers are finding some value in this. And that is the reason I thought that let me just go out and, share this more widely. Why just course mates who are close to me? So that's the main trigger for this call. And so I'm not an employee of Jama. I am doing just to help Jama spread their wings. And the main reason is that if somebody gets helped, like the way I got help from Jama, and more importantly, much before than I got help from Jama, that's what I would probably a good thing for me. So without wasting any further time on this Saturday afternoon, I'll hand it over to Manoj and Ram for them to jump into it. But one short housekeeping point: if you have any questions, either post it in the WhatsApp group or post it into this Zoom meeting. After Ram and Manoj are done, I'll just assimilate take on that questions and they will answer it. So over to you, Ram and Manoj.
So Ram, you want to say something or should I get started?
You get started. We already lost a few minutes in the waiting, so please get started. I think it's Manoj and Ram.
Yeah,
Not
this
Ram
is
and Manoj.
that's okay. So I will share the screen for the benefit of keeping a tab on what I'm speaking, etc.
Manoj, sorry to interrupt. Just for the benefit, and since we're recording the session, a quick intro about yourself, maybe 20 seconds, and after that
I'd rather, okay. So I am director in Simply Grow Technologies. That is our company name. Jama Wealth is our brand. We are corporate registered investment advisors. And if you strictly look at the law of the land, only SEBI registered investment advisors are eligible to provide investment advice. Not even chartered accountants are eligible. I am also a chartered accountant, apart from being a cost accountant, company secretary, and an MBA from Indian Institute of Management, Bangalore. Over 30 plus years, I have been supporting various people with financial planning.
Thanks, Manoj. So my name is Ram. I also have 25 years experience in the finance and technology domain. We started Jama Wealth about 7 years back, leaving our full-time jobs. And this is our full-time, pretty much we do this. I worked, in addition to the MBA, which both Guru, Manoj and I share from the same institution, IIM Bangalore. I worked at Infosys for a decade and a half in the fintech space. And then I worked with the ICICI Group. I've been a CIO for several years before starting Jama. Over to you, Manoj.
L is for liquidity. Liquidity means ability to get cash. I'm not going into the technical definition of liquidity. For us, as investors, as individuals who may need money, our first step is to ensure that we have money that we need at the time we need. Anything can go wrong at any point in time, and that should not disturb our long-term planning. We should not be forced to break our investments. And therefore, some amount of money has to be kept aside purely to meet these immediate expenses. It need not always be a negative thing. Sometimes, you get this feeling, it's been 5 years, I didn't go for a vacation. Let me go for a vacation. But if for that you have to break your investments, then, you are compromising. You should be able to go for your vacation, or, you want to buy the latest gadget, television, whatever gives you happiness, you want to do it. Money should be there without having to break your long-term investments. And that is what we call our liquidity bucket. So emergency fund that we talked about comes under liquidity bucket. That is the objective of emergency fund. Something goes wrong, we dip into that. So any immediate goals, whether we thought of it or it is unexpected, will get met out of liquidity. And as I said, about 12 months of monthly expenses should be a sufficient number for your liquidity. You're more conservative, build a 24-month bucket, liquidity bucket. If you are aggressive, build a 6-month bucket. Up to you, your comfort. But you should have a liquidity bucket so that your other investments are protected. Our second step in the LSD formula is security. Security that, just like you provide security to us, we sleep peacefully knowing that our armed forces are protecting us. Similarly, your assets should have that component which will always be there, irrespective of what is happening around the world. There is a Ukraine-Russia war, there is interest rates going up, coming down, there is breakdown of talks, the India-China escalation happens. Whatever is happening, we know that this money is safe and is always there for. What are the assets that come under this? Your provident fund, public provident fund, your Sukanya Samriddhi Yojana, if you invested for your girl child, government securities, gold, the house that you are living in, if it is a own house, all these give you a sense of security. You know that, yes, these are there. You are not going to sell your house if the real estate prices go up or come down. You are going to stay in that house, enjoy that house. So this is your security bucket. Now that you've taken care of your immediate needs, expected, unexpected combined through the liquidity bucket, and you know that there is sufficient buffer for you that helps you to sleep peacefully, the next task in hand is to grow the existing wealth, because we have lots of goals. we want to do a lot of things which we may not be able to do immediately. And each person will have different goals. And one person may not relate to the other person's goal. One person may feel that having the most expensive car is my goal. I don't know which is the most expensive one. I want to buy a Mercedes Benz or a Rolls Royce or whatever. And other person may say, this guy is wasting money. Why does he need that car? Somebody else may say, I want to go on a world tour. That is that person's goal. But whatever be your goal, you will need money. And these are not things that you can do immediately. I'm sure not many in this group will be able to buy a house instinctively. Arey, discount mein mil raha hai, let's go and buy, 1 crore ka flat 80 lakh mein mil raha hai, let's go and buy. Not that easy. You can't do it off the cuff. So you'll have to plan. Yes, I want a house. Do I want a house or I don't want a house? From there on it will start. But whatever you want to do, that is possible only when you are investing for growth. Because here the devil of inflation that we talked about plays a major role. If you are having 100 rupees today and you invest that in a scheme and that 100 rupees becomes 105, but with that 105 rupees, you can buy only what 90 rupees was able to buy 1 year back, then your money has not grown, it has actually depleted. And therefore, the minimum that we have to do is beat inflation. If we are not beating inflation, then we are losing our assets, we are losing our money. We are not investing, we are disinvesting. So it is very important for us to choose those assets that can beat inflation and enhance our net worth so that we can meet our financial goals. And for that, the best vehicle will be equities. We'll now share what we as an organization do. As I told you, we are SEBI registered investment advisors, corporate SEBI RIAs. So only SEBI RIAs are eligible to provide investment advice, and there are very few corporates and individuals who are in this business. It's a very difficult business, but we were driven by our motto that we want to disrupt this industry where there is a lot of deceit, particularly of gullible investors. So we follow what is called as a roots and wings philosophy. Ram, you want to take this up since you're here?
Yeah, Manoj, thank you. Can you all see me? You can hear me, right?
Yes,
Manoj?
sir.
Yeah. So the philosophy, I think the specifics in terms of how to invest, it's all out here. Manoj has already covered about why it is important to secure your basis. It's not defense ke baare mein he's covered a lot. Now, the offense part, which is how do you make sure that the wealth is correctly deployed in the right instruments? Once your liquidity and safety are met, the third part of the LSG framework is growth. So you have to invest in good quality companies and monitor them regularly, because you will run into companies like a Satyam or a Nokia or a Enron, or so many examples are there, Z Entertainment, which have gone bust within a matter of days. The way we protect you from that is with a philosophy called roots and wings. So in the roots, we are basically talking about stocks where the debt levels are very low, the companies are consistently churning profits, which are getting reinvested and increasing the capacity of the company to generate more profits. And there's a virtuous cycle that is getting built. That is what an ROE measure over a long period of time gives you. We look for that. We look for companies where promoters are having significant shares of their own companies and they are not acting as agents. Otherwise, there are so many cases where the promoter has control of the company and they take out money from the company and the shareholder gets the short end of the stick. So then that is on the root side. On the wing side, we look at what is the earning growth. We ideally want companies with strong roots, but also which are growing in terms of profits, in terms of revenues, market share, EBITDA, or which is called the operating income, etc. So these all put together gives us a very curated shortlist of maybe 3-4 dozen companies, which we then further deep dive with our human due diligence, and we go deeper. We do forensic checks on the company, balance sheet and P&L. We do talk to stakeholders in the industry. They could be suppliers to the company, they could be employees in the company, they could be various other people, to get a feeling of how the company is run, how's the management quality, etc. Then we also look at what the management themselves are saying and how they're delivering. So there's a lot of work that goes into creating a portfolio of stocks, which we then help you invest. Now, here's the whole thing. We don't take custody of your money. We don't say, hey, give me 30 lakhs, 40 lakhs, and I will return it to you after 4 years, 5 years, or whatever. Because those models, like Manoj said earlier, are prone for conflict of interest, where once they have control of the money, the fees are recovered from that money. So you feel it is free, but actually your portfolio is possibly being milked, or it is being invested in stocks in shady companies. So this we eliminate by a clean operating model where there is no, it's a zero contact. That whole combination is what we help our investors. Manoj, can you move to the next slide?
Yeah.
More than 2 lakhs, or had you invested 1 crore, it would have returned more than 2 crores in the last 3 years. Now, these returns are not guaranteed that anything like that will happen over the next 1 year or 2 years or 3 years, but we're just telling you what our actual performance has been. And we have audited reports which back this up. This is our core strategy called Jewel, which is primarily a flexible capitalization strategy, which means we invest in companies in the top 350 rank by market capitalization, which includes large cap, mid cap, and a little bit. Manoj? Yeah. So I think we'll stop here for now. The key point is you have worked hard, you have earned a corpus. It could be 1 crore, 2 crores, or whatever. You are looking for some professional help. कि कैसे invest करना है? Should I put everything in an FD? Well, inflation will eat your money. Should I put it under the mattress? Inflation will eat your money faster. Should you put it in trade stocks? Well, you could lose the money faster than anything else. Of course, Bitcoin is not the right place. The key answer is high quality stocks which are in demand as in the market demand. Don't confuse demand with what the traders are demanding to buy and sell in the market, in the stock markets. Demand as in an Asian Paints has consistent demand for paint. There are a lot of macro trends happening in this country as we speak, in terms of whether it is the highway construction, whether it is the urbanization, whether it is the improvement in the digital infrastructure. India today has the best digital infrastructure in the world. UPI has a record. I don't need to talk about that. But then look at the next wave of reforms that are coming on the digitalization front. We have the open network e-commerce which is coming, which is going to again transform how goods are bought and sold. We have the national logistics policy, which is again riding on digital infrastructure. A lot of APIs are getting exposed so that the friction is minimized. We had GST reform that got passed after years of stalemate. The bankruptcy reforms are there. So all of this points to a phenomenal growth run in India over the next 5 to 10 years. And our recommendation to you is not to keep all your money in the safety instruments. That doesn't mean that keep it in unsafe, but basically that means is that make sure your safety needs for the next 5 to 7 years or 3 years, depending on your situation. You could have a spouse who's earning a good salary. You could have children who are already settled. It all depends on your various criteria. And that is why Manoj has been again and again insisting that the person who gives you advice should be somebody with zero conflict of interest. They should not be paid by anyone else. The moment they're paid by somebody who has a commission, entire advice could go suspect. So our sincere request to you is, don't give in to those temptations. And some of them could be known people who don't know. Frankly, I know many cases where the insurance agent doesn't know that the policy is going to cause medium and long-term harm to the person. In some cases they know, but they don't care. They have sales targets, but in some cases they don't know. So please take professional help. Any SEBI registered advisor in this country, and there are a few hundred of them who are active. Few hundred as in just a few hundred, 300-400 across the country of 1.2 billion people. But that's the sad reality. So take a SEBI RIA help in terms of planning it, and uske baad how to invest. There are people like us who can help you do that, and also give you the best growth instruments and organize everything without ever touching your money, and which gives you that kind of comfort and I would say trust that yes, this money is with me and it is not. And plus we invest the same, whatever we preach, we do the same thing. We invest in the same stocks, and therefore there is a skin in the game in terms of how we operate this. So with that, I think we've probably come to the 1 hour end, and I will go through the questions now. What are the charges for advisory services? Well, sir, the advisory services, if you're just looking for a financial plan, then the fee is, it's usually around 10,000 rupees, but we can figure out, depending on the complexity, we can give you a better quote purely for financial planning. But if you're looking to invest for advisory services in terms of investing the money, we have a SEBI regulated fee that is capped at 2.5% of the invested money per annum. Okay, so 2.5% of the invested money, and that's payable once every 6 months. So the fee will be 1.25%, followed by another 1.25% after another 6 months, and that is the fee. There is no performance fee. There is no commission. There's no brokerage. We advise all our clients to ride on zero brokerage providers, or whichever demat that they prefer, they can. We are not sub brokers, and we're not trying to make trades and on every trade make a sub brokerage. So therefore our advice is very clean and no conflict of interest. So I've covered about the charges part. The second part of your question that came in at 5:04 p.m. was, what is the guarantee of returns? Well, per regulation, we are not allowed to guarantee any returns, because returns are market linked. Even a fixed deposit in a bank, there is no guarantee on what the long-term return for that is. You may come in at a 5.5% return, but when the FD renews, the new rate nobody can guarantee. So please don't. This is again another issue that we've seen in case of insurance policies. They say, I will guarantee you pay 1 lakh for 10 years. I'll guarantee you lifetime, 50,000 per annum for lifetime. So those guarantees typically work out to a 2% or a 3% long-term rate of return. So please, this math is very simple, but unfortunately, most people, they don't realize that somebody paying you 1 lakh of rupees after 20 years is equivalent to paying you 2,000 or 3,000 rupees today. So that is, so don't fall for guarantee of returns. Nobody is legally allowed to guarantee any return, and we will also not guarantee any return. But we will tell you about our long-term performance, and one slide was there. Our long-term, as in the last 3 years, we've actually given a 20% plus return. But you could expect a 15 to 18% if things are well, if you stay invested for at least 5 years in equities. That is what you could expect, because that is the kind of growth that this country is seeing, and that's the kind of return that equities have given generally over the past also. So there is one hand that got risen. I don't know who it is. I see one hand raised. That is, yeah, I think there's a technical glitch in Zoom. There are a lot of people who are who've come in as Guru Singh. Sir, you may ask your question. You may unmute yourself and ask your question.
My question on the return, you have misunderstood. What I mean is, you are taking 2.5%.
Yes, sir.
I'm investing in stock market for last 3 years.
Yes,
and
sir.
whether it was a Ghoda or a Gada, everyone who invested in 2020 has come to around 30% of return in the pandemic time. If
Yes,
I'm
sir.
paying 2.5%, I should at least know that it will be more than inflation, say 10 or 12%. Certain PMS, I have studied PMS also, they take only after you have come to a particular level.
Yes,
If
sir.
you have not taken me to say 15%, and if I still pay you 2.5%, it doesn't make sense.
You're
My
right.
question was related to that.
You're right, sir. I'll cover that. I understand your concern. Firstly, we are not, as of now, a PMS. In a PMS, firstly, the minimum investment ticket size is 50 lakhs. And the money is given to the PMS provider, and the custody is transferred to them. That is one risk that is there, which we talked about earlier. Secondly, as per regulation today, SEBI registered investment advisor cannot charge performance fees, because SEBI wants registered investment advisors to be more sober and not be very brash or take a lot of risks in giving advice. So there is an exception, however, to this rule, which says that if you are an accredited investor, and there is a rule for that, you can get an accredited investor status by paying about 8,000 for 2 years and give some proof. You need to show a net worth of about 7 crores or income of about 2 crores or a mix of that. Then this rule is waived off, and you and I can enter into any agreement where you say, look, Manoj, I will pay you only 0.5% or I'll pay you only 1%. And if you meet this hurdle, then I will pay you more. Okay. As of now, what we are doing is on a case-by-case basis. We are not doing performance. See, the problem with performance fees, as I said, is it carries an impression that risk can be very high, because advisor का क्या जाता है? Advisor बोलेगा ये 5-10 stock में डालो, डूब गया तो डूब गया, मिल गया तो 20% share मिल गया तो he makes a big money. That is the attitude that they generally want to avoid. What we can offer, sir, is, and we can have a separate conversation. We'll email you this recording, and you could also send us your contact information. We'll contact you. What we could do is we could say that, look, while staying within the regulation of 2.5%, we'll see how we can stagger our fee. Right? In the advisory model, the fee is not auto-deducted, sir. So what it means is that I have to come back to you every 6 months and say, sir, please pay the fee. And you may say, look, in the last 6 months, you didn't perform well. I will wait for some time. Or you may say, I will not pay you any fee, in which case, we may be, it may not work out for. So the possibilities are open-ended. It's not a closed-ended arrangement, is what I'm saying, sir. I hope you understood what I'm trying to say.
No, I have understood. I hope I'm not eating too much of time, but some of us are active investors.
Yeah.
We are not traders.
Right.
I think none of us is a trader.
Right.
If we are investors, suppose I have got a portfolio of around 1.5 CR in 2-3 different accounts.
Right.
You will give me advice on what basis is it weekly, is it quarterly, is it fortnightly? And then, you will give me advice to enter as well as to exit.
Yes, sir.
Okay. So based on that, how can you take 2.5%? My 1.5 CR is already invested. It is in Reliance, ICICI, Kotak Mahindra Bank. It's already invested. So will you, that's what I want to know. How will you judge this 2.5%?
Sir, it's very simple, sir. You will have to carve out a piece of your portfolio and say, guys, you manage this for me. And that could probably be in a different Demat account so that it's very isolated and it's easily distinguishable, right? And then we will tell you, sir, isme you do this, you buy these 20 stocks or 25 stocks, and after 3 months, you make these changes. And you don't have to do a data entry every time. You just have to click a button and our system will do the entire thing for you. It will take you to your respective Demat account. That entire technology we've built, right? So it is going to be isolated. And so does that answer this new question that you had?
It answer partially because, that what is the minimum amount you are starting with for a Demat account? Like,
sir, our minimum is 25 lakhs, sir.
Okay.
We don't have the PMS regulation of 50 because, in fact, we don't have any minimum as such by regulation. However, because there are overheads from our side, we don't take clients below 25 lakhs typically, right? Depending on the overall picture, it could be somewhat flexible. Sir, you also made one point that, in the last 3 years, every donkey has become a ghoda and it has run. I would beg to disagree a little bit, sir, on that, because in the last 3 years, the Nifty index, including dividends, has given about 15%, sir, 15-16%. Our portfolio has given 27%, sir.
No, I will disagree. If somebody is slightly street smart and I made in 2021, I made 40%.
Yes, sir.
And 21-22, I made 30%.
Sir, I will tell you, sir, in that year, we made 67%.
Yeah, that's what I'm saying.
So
I've yet to meet any intelligent person who has lost money in these 2 years. That's what is my point.
No, that's what I'm saying, sir. Sir, our performance is from 2019, much before COVID.
Yeah, I've seen that.
Much after COVID. So we've seen the COVID COVID crash. We've seen the recovery, and I would say that we've managed to do well, and which is why our clients like Guru Nandan Singh, who's one of your fraternity, has stepped up and said, "Look, guys, I would recommend them." So we can share more details, sir. There's no issue with that. As you rightly said, you don't want to clog everybody's time. But there's a lot of data that we have, and we would be happy to share with you. And if there's anything to learn, we would love to learn it from you as well, sir. Thank you, sir. So your kind name, sir?
I'm Hemant Ahluwalia.
Right. Any other questions for Manoj or myself? You can raise your hand in Zoom, or you can Vivek ji, Smriti ji, Narendra ji, Kishore ji, Guru Raj ji. And I can't, Mr. Amandeep Bains. Few more names got camouflaged by Zoom. They all are appearing as Guru Singh, but
hello, my name is Amit. Am I audible?
Yeah, can you please repeat your name, sir?
Amit.
Amit, full name?
Amit Hunt.
Right, sir.
Yeah, I have just two small queries.
Right.
One, when we go to the step one of seeking an advice in financial plan from you, what are the charges for that specifically? I think you answered for the investment part of it to the previous participant. So that is one. And second, should we go ahead with your plan and invest as you just elucidated? The quantum of amount stroke, the quantum of whatever, you say equities or, the number of shares or whatever in a particular specific script or fund that you would advise would be invested by the client, or would be handled by you through your some platform or some feature? Or it would be the control would be with me, if I may put it as simply in a layman term, that I get to decide finally. You asked me to put 100 shares in XYZ, but I said no, as of now, I can do only 80 based on, though I've taken your advice, but I still have the discretion at the end as to how much I want to go ahead with it and how. And at the same point in time, the investing part of it, the and also the, whenever I want to draw part of it or sell part of it, is the controls are with me and not through your platform, or I have to be dependent on you.
Yes. So Amitji, the control is always with you because it's your demat account. We think of us as a co-pilot or a pilot, and maybe you are the co-pilot also sitting in the same aircraft or vehicle, whichever it is. So we will give you advice, and we have a mobile app and a web app, and you can just tap on it and execute the advice. The execution of the advice will take you to your demat account. The portfolio gets presented for your execution. If you say that, no, I don't want to buy this stock, or I want to buy less of that stock, you have the option to do that. Or if you have a question, you can say, look, why are we buying this stock? I know the promoter of this company, and I have this concern. And we can have a conversation in which if we are able to convince you, you can. So I mean, it's a mutually agreeable model, in terms of how you want to execute it. The withdrawal, because the money is in your demat account. Let's say you invested 50 lakhs and it's become 70 lakhs, and you want to draw 10 lakhs for whatever need. You can tell us, and we'll tell you which stocks and which quantity to sell to meet your liquidity requirement. So at no point will we tell you that, no, you can't, there's a lock-in, you can't take this money out. That we'll never do that. So please rest assured on that count. As far as tweaking the portfolio is concerned, we would request you to ideally stick to the model, the portfolio that we've drawn up for you, because then it makes tracking the performance, etc., a bit easier. But like I said earlier, if you have a strong reason to disagree or differ, we can have a discussion and find out a mutually agreeable way, because there is no ironclad rules in our model. I hope I've answered your question, sir.
Yes, and about the first part.
First part, I'll come to
that. Advice part.
Yeah. So
For
first part,
financial.
Yeah. So first part, sir, for financial planning and comprehensive financial planning, we typically charge about 10,000, but we can look at a discounted rate for this audience, and we will also, if you decide to use our equity advisory services, then we will make that part of the overall thing, which means that for that we will waive off the fee, because you would anyway be paying us a fee for the equity advisory services.
Thank you.
I think if there are any other questions, we'll wait for a couple of minutes. But I want to just pick one question from the questions that were shared upfront while registering. So there were a lot of goal-based questions as to how to get to 2 CR, 5 CR. Other goals were goals was a house, then children education, and so on and so forth. So there were multiple goal-based questions. But there was one process-based question, which I like, which somebody asked, is that how do I do a disciplined investing, which is missing in me? So you might want to talk a little bit is how to be disciplined in investing. So we heard a lot of theoretical background, and that's very good from Manoj. But when it comes to execution, that how do you enforce that discipline in very short?
Ram, should I answer?
Yeah, Manoj.
Yeah. Will you answer or should I take it?
You go ahead, Manoj.
Okay, so here is the simple answer, Guru. When we work for an organization, there is a difference between what is told to us as our salary and what we receive as take home in our bank. Inevitably, there are a minimum of two deductions. One is the tax and the second is the contribution to provident. So even if someone is saying that I have never done any investment because I did not have any money, that person is not telling the truth, because whether he or she liked it or not, the provident fund money has been deducted and investment has been made. So the simple answer to inculcating discipline is to provide standing instructions to whichever entity through which you are dealing. If you are investing, for example, in a mutual fund, then you sign up for a SIP. If you are investing in, we also have a SIP facility. So your money is auto debited. So you don't have to, if there is a choice of you thinking, mulling over and then saying that, okay, today I have a more pressing need, so I will postpone my investment, then the discipline will not kick in. But if you have already, signed up and you have already given instructions, then there should be a very strong reason for you to stop that instruction and do something else. So ideally, if you have to inculcate discipline into investing, then you need to sign up and commit. That does not mean money is being forcibly taken away. If you do not wish to continue, you can always stop. But as I said, then you require the discipline to actually stop. The second thing, purely from a financial planning perspective, the discipline has to be of avoiding debt. For example, use of credit cards. So there are simple techniques that if we use, then we will be able to control our expenses, which means we will have more investable surplus, and therefore we will be relatively more comfortable in going ahead with our investments. If we don't have that, if we are impulsive with respect to our spending, that is when this discipline issue will come in. So it is not so much of investment, it is on spending that we need to be a little more disciplined. I hope I have answered the question, but if there's anything.
Yeah. So what I want to say is, you need a tool for discipline. Okay. A tool will make it easier. Second is, a coach will make it even more easier. Because see, all of us know that, you need to eat healthy and exercise to do well, but how many do it? Right? So what is missing is, what is missing as in what can help is a coach and a tool can help. And with what we do, we are those coaches. We will act as a coach. We will talk to you. We will make sure that once the plan is drawn for you and you commit to a monthly SIP of 1 lakh or 2 lakhs or whatever is the amount, we follow up and make sure that you invest. Second, we have a nice mobile app which works on both iOS and Android and on web, which alerts you, hey, your goal is slipping, your goal is not on track, or hey, your SIP is due and you're in, please click on this link and invest in just one click. And or somebody will call you, or operations team will call you. So with the aid of a coach and a tool, the chances of you sticking to your regime increase quite significantly.
So thank you so much, Ram and Manoj. And thank you so much, the audience. Saturday is always a day some people look forward to unwinding. So taking out time and staying for so long. So everybody who has stayed up till now, it just indicates that you're really committed to your financial planning. So we'll just wrap up this call. So Manoj and Ram, if somebody wants to take this forward, how do they get in touch with you?
Yeah. So firstly, what I will do is, the number of registrations were 62, but unfortunately we had only around 20 people who joined. So we will mail a copy of the recording to all of you, along with the contact details on how to get in touch with us. So my colleague Tarun is also on the call. I am going to share his number in the email that goes after this. So I would request you to please shoot across any questions you have. If you want to get a financial plan started, or if you want to, like Mr. Aluwalia Saab had this point, where there's already a portfolio which is being done, we can do a complementary portfolio analysis and identify out of that 1.5 crore, you know, what stocks we think are of concern, what stocks are good. We don't want to get into the good stocks. You've been doing a great job, sir. Continue. But the stocks where we feel we can add value, you could maybe carve that out and give it to us, and we can, you know, make it better for you. And you can also then test it, and if it works well, you know, ramp it up later. So you could get in touch with us. I'll give both the email ID and the phone number in an email. And in case anybody wants to, I'm going to type Tarun's email ID. It's tarun@jamawealth.com. You can just note that down. It is there in the chat window here. I will send it to everybody in the meeting.
Some of the people were did not receive the Zoom email invite on the email. So I've created a WhatsApp group in the background, Ram.
Perfect.
So I'll share this number as well as the recording as well as the contact points on the WhatsApp group along with the email.
Yes, absolutely. Sir, we believe that the armed forces are a fantastic role model for discipline in the country. And we feel that in the financial space, we are like that, with the same values, with the same discipline, with the same rigor, with the same energy, the same ideology, the same tools. Aapke paas missiles hai, frigates hai, all the kind. We also have the right tools. We have a fantastic mobile app. We have a lot of technology that we've homegrown. So it's a great complementarity that we offer. And you know, we'll share the data with you, the details, and we look forward to starting off a relationship wherever you know, we can add value, sir. Thank you so much, Guru, for taking out time and deep interest in organizing this. This would have not happened, but without your leadership, we are grateful for you for that.
Thank you, Ram, Manoj, and thank you everybody who are in the call. Have a great weekend.
Thank you.
Thank you, and Jai Hind.
Bye-bye.
You have to save the recording, Manoj, right?
No, it gets recorded, and after some time, Zoom will inform us that the recording is ready. Then we have to download. We don't have to do anything.
Oh, wonderful. Okay, bye then.
Bye. I'm ending the meeting. Bye, everyone.